Your rate lock expires in 45 days, and your lender isn't going to remind you. They're counting on it. I'm going to show you the exact warning signs that your lock is about to change unfavorably, because most homebuyers don't realize their rate lock has an expiration date until they get that phone call from their lender with a drastically different number. Welcome back to WealthFrame. I'm your host, and if you're buying a home, refinancing, or stuck in a volatile rate environment, the next 10 minutes could save you thousands of dollars. Let's start with the basics, because this matters more than you think. A rate lock is a promise. Your lender says, "We're locking your interest rate at 6.8% for the next 45 days. You feel safe, you start the inspection, you order the appraisal, everything's moving forward. But here's what nobody tells you. That lock has an expiration date, and it's not flexible. When you lock a rate, you're also locking a timeline. Typically, it's 30 to 60 days. Some lenders offer 90-day locks, but they come with higher costs up front. The clock starts ticking the moment you lock, and once that window closes, one of three things happens. 1. Your loan closes before the lock expires and you get your rate. Problem solved. 2. Your lock expires before closing, and your lender automatically extends it, usually at a higher rate or with added fees. 3. Your lock expires, rates have dropped, and you can't benefit because you're locked in and out of time. Now here are the 7 warning signs that your rate lock is about to change unfavorably. Pay attention to these, because your lender's timing isn't a coincidence. Warning sign number 1. You haven't received a clear closing date from your loan officer. This is the biggest red flag. If your loan officer hasn't given you a specific closing date in writing, your lock is at risk. I'm not talking about sometime next week. I mean a date circled on a calendar. A vague timeline means your lender hasn't committed to closing before your lock expires. That's intentional. They want flexibility to push you past your expiration date if rates rise, because they benefit when you accept a higher rate. Action step. Call your loan officer today. Get a written closing date. If they can't give you one within 5 days, ask why. Warning sign number 2. Your appraisal or title work is moving slowly. Here's the trick. Appraisals and title searches take time, but they shouldn't take 20 days. If your lender is moving slowly on these, it's usually because rates are rising, and they want your lock to expire. They'd rather lock you in at a higher rate than close on the original one. I've seen this happen constantly. A home buyer locks at 6.5%, but the appraisal takes 3 weeks because the appraiser is backed up. By the time you get the appraisal, rates have jumped to 7.2%, your lock expires in 3 days, and suddenly you're being offered a new lock at the higher rate. This isn't always intentional, but it happens often enough that you need to monitor it. Warning sign number 3. Your loan officer mentions extending your lock. If your loan officer casually mentions that you might need to extend your lock, this is a signal. It means they're already aware that closing might not happen before the original expiration. They're priming you to accept an extension fee, which is their profit, not yours. Extensions typically cost 0.25 to 0.5% of the loan amount. On a $400,000 loan, that's $1,000 to $2,000 out of your pocket. Warning sign number 4. Underwriting is requesting one more item after you've already submitted everything. Underwriting asks for documents, pay stubs, bank statements, employment letters. That's normal, but if they're asking for items 10 days before your lock expires, and these items will take 5 to 7 days to gather and verify, there's a timing problem. Again, this might be legitimate, but watch the pattern. If every time you submit documents they ask for something else, your lock expiration isn't an accident. Warning sign number 5. You haven't heard from your lender in 5 days. Radio silence is a warning sign. If your loan officer isn't checking in, updating you, or pushing the application forward, your lock is silently approaching expiration. Loan officers know when locks expire. If they're not being proactive, they're being passive. And passive lenders let locks expire. Warning sign number 6. You see rate quotes dropping, and your lender hasn't mentioned it. If mortgage rates are falling, like we've seen multiple times in the last 2 years, and your loan officer isn't proactively offering you information about your float-down option, they're hoping you don't know it exists. More on float-downs in a second, but this is important. If rates drop 0.5% or more after you lock, a good lender brings it up immediately. If they don't mention it, they don't want you to have it. Warning sign number 7. Your lock is 40+ days old and closing is still 10+ days away. Simple math. If your lock is 50 days old and closing is 15 days away, you're closing after your lock expires. This is a critical moment. You need to contact your lender immediately and ask, what happens to my rate if we don't close before my lock expires? Don't ask politely. Ask directly. You have 10 days to fix this. Now let's talk about float-down options, because this is where most people get confused. A float-down is basically a second chance. After you lock your rate, if mortgage rates drop significantly, some lenders allow you to float your rate down to the new lower rate, but only if you meet certain conditions. Condition 1, you locked in your original rate. Condition 2, rates dropped after you locked. Condition 3, you exercise the float down before your rate lock expires. Condition 4, the application hasn't gone to final underwriting. Here's where it gets tricky. Not all lenders offer float downs. Some charge for them. Some only offer them if you locked at a premium rate to begin with. The worst scenario, your lender offers a float down, but only if you agree to extend your lock and pay a 0.25% fee. Rates drop 0.5%, so you get a 2.5% benefit, but you pay 2.5% to get it. You're breaking even while your lender profits. Better scenario, your lender offers a free float down. Rates drop 0.5%, you float down, no fees, no extensions, close and done. Worst scenario, your lender doesn't offer float downs at all, and by the time you find out, your lock is expiring. Let me give you a real example. Jennifer locked a rate at 6.75% on a $350,000 loan for 45 days. 2 weeks later, rates dropped to 6.0%. She called her lender and asked about a float down. Her lender said, "We can float you down to 6.25% for 0.5% in closing costs." Jennifer paid $750 extra in closing costs to get a 0.5% rate reduction. On a $350,000 loan, that 0.5% savings is about $180 per month, or $64,800 over 30 years. The $1,750 upfront cost pays for itself in 10 months. But here's the thing. Jennifer's original lender locked her at 6.7%, not 7.25%. The float down to 6.25% still left her at a rate higher than the current market. Why? Because the lender designed the float down to limit how much benefit Jennifer could receive. If Jennifer had shopped around instead of accepting her lender's float down, she could have refinanced with a different lender at 6.0%. No extra costs, full market rate. The lesson: a float down sounds good, but it's only good if it actually gets you to market rate. So what do you do if you're in a volatile rate environment and your lock is expiring soon? Step 1. Get your closing date in writing, today, not tomorrow. Step 2. Ask your lender in writing, what are the terms if my lock expires before closing? Make them explain in writing what your new rate will be and what fees will apply. Step 3. Ask about float down options. Specifically, if rates drop, can I float down? Are there fees? What's the deadline to exercise a float down? Step 4. Monitor the market. If rates drop 0.5% or more, push for a float down or refinance with a different lender. Step 5. If your lock is expiring and closing is still weeks away, start shopping with other lenders now. Don't wait until your lock expires. Get competing quotes while you still have options. Here's the hard truth. Your lender doesn't want you to understand rate locks, float downs, or expiration dates. Understand